honestly, what surprises me more is that there aren't more fed up senior female investment bankers who are like, this, I'm sick of getting sexually harassed for free, and like, I'm going to become a high-end hooker and make a bunch of money for way less stress.
Welcome back to On the Horizon. This is Melrose Michaels. I am your host, and I'm here to share what's worked for me in building my adult creator business to try to make building yours just a little bit easier. Let's get into today's episode. Mia Lee is CEO and co-founder of Mia Lee Financial, a registered investment advisory firm for adult entertainers and a former chief financial officer at Petite Mort, an industry lifestyle magazine. Mia has been a sex worker since 2018, when she left her previous 12-year career in finance. She's done many forms of sex work, ranging from full service to stripping to cam modeling, phone sex, and even OnlyFans. Mia does pro bono financial literacy work for workers across the adult industry and is a licensed CPA, certified public accountant, and a licensed investment advisor representative holding a Series 65. Thank you so much, Mia, for joining us today. I am so excited to have you on.
Thank you, Melrose and Bryn. I am so excited to be here with you guys and our audience.
Yes, I'm stoked. So we've kind of like pivoted a little bit and we're changing up the way we do things on our Twitter spaces just slightly. So I would love to kind of start this Twitter space or these podcast episodes around this idea of how meaningful conversation is. Like, I hold this belief that in modern times where information we come across or we get exposed to is kind of algorithmically inclined or aligned to us, and just our interests or what we engage with, et cetera, that we kind of tend to live in these echo chambers and we don't often even realize it. So I guess my first question to you personally is, how important do you think it is to kind of get outside of these echo chambers? And then what is one thing you do personally that exposes you to new ideas, opinions, or experiences?
Sure. So that's actually a great question. Back when I was working in finance, I found there's a lot of economic studies and data around this, that if you have a team of top performers who are all good at one thing, which is a lot of financial teams, versus a team of the same number of average people who are all good at different things, the average team will outperform simply because of the diversity of their skill set and like I hate this word, but like the synergistic effect of those divergent skill sets and the perspectives and ideas that it's sprung, et cetera, et cetera. Now, obviously, this comes with challenges because you're going to have conflict and like personalities and point of views. So as a manager, I had to navigate all of that. But I really took that advice to heart when I was working in my consulting role. And I would choose a more diverse team, not just diverse as in like, people who looked different, right? I chose people who were good at different things and bad at different things. And one thing I used to do in my personal life when I was in finance is I would listen. So I speak 4 languages, Mandarin, Spanish, and Arabic, and I listen to news in all 4 languages. And that's not the most optimal or practical thing for me to do now, but I think my entire job now as CEO of Mia Lee Financial is to navigate 2 spaces, right? Because I am a Wall Street girl. I'm also a sex worker. And those are communities that often have very, very different views, priorities, knowledge, skill set, et cetera. So I feel like I do it every day. So every morning I listen to my financial news. That's just my routine. I do my light therapy, I drink my coffee. And then I have an amazing content consultant who is on this call, Victoria from UPay. And she helps me with the content creation side and also what's trending on social media, what's trending with sex workers, et cetera, et cetera.
I love that because that's a great way to approach and stay exposed to many different things. Like the speaking multiple languages and the consuming from different outlets, it's going to give you such a well-rounded view on things. I love that. That's a great approach. Remembering what I know about you and the conversations kind of we've had and the communications we had going back and forth, and also just, scouring your socials. But you've had a 12-year career in finance before transitioning into sex work. So what inspired that shift? Like, how did your finance background influence your approach to sex work? It's such an unusual, place to come from historically.
I apologize if this is repetitive for anyone on this call who's already read my press, but essentially I got sick and So, for context going further back, I was a Chinese political refugee. I grew up in foster care and I finished college at 19 and started on Wall Street, not because I was a genius or anything like that. I was literally just broke. So, poverty just drove a lot of like necessities and decisions. I skipped third grade because I was in a bad school district with a shitty ESL program and I had to teach myself how to read. And then I went to 5 high schools in 3 years in foster care. The last one had a lot of gang activity, like graduated early. And then college, like scholarship ran out after 3 years, had to start working. So I sort of just like I chose finance just as a practical career because I was broke and I've been homeless before and I had no safety net. And I was like, I just need a stable ish job that pays well enough for me to have financial safety, right? And it's jarring when you come down with something like depression and anxiety and you're like, okay, I can't, it's not a good idea to be working finance pace anymore. And so I was on medical leave and I was brainstorming like what were my options. Do I go back part-time? That doesn't really work super well in the industry I was in. Do I pivot to something like tech that has better hours, but then I'm going to run into a lot of the same problems with work stress? And then I basically just like approached, I did my whole like consulting, like cost benefit analysis. And I decided that I'm going to take a moonshot on high-end escorting because I thought that that would, I would be able to repurpose a lot of the skills and clients that I had in finance. And so I wouldn't have to start completely from scratch. So I chose high end escorting as the most optimal solution given the resources and constraints that I had in my life at the time.
It's interesting. Something you said right now stands out to me, and you said repurpose the skills. What are the skills that like you were able to identify that were gonna help that would cross over from like what you've experienced in finance and the career you built to the sex work that you were gonna go into? I think that's so interesting.
So sex work at the end of the day is a business, right? So for people who are not super familiar with what I did on a technical level in finance, I did bankruptcy restructuring, which means I either reorganized companies that were going through bankruptcy to like make them profitable and then like bring them back to consumers, or I sold off the pieces to recover value for debt holders. So the like media example of that is if you've seen the movie Pretty Woman, I had Richard Gere's job. I know everyone laughs at that one because they're just
Love
like,
that.
that's not how I thought that was going to go. But it's like the easiest way I can explain what I did in finance to people who don't really know finance. So I did that for like the top firms for a long time. Was like a recognized industry leader, and one of the cool things about that is your restructuring is industry agnostic, bankruptcy is industry agnostic, so you get really good at and efficient at like researching new industries, new businesses, and figuring out how to optimize them. So in the information age, there's just like an abundance of information about sex work. It's all about parsing out the signal through the noise. And so I applied my consulting skills to that. And then I applied my operational business skills to setting up my sex work business. And then I think the most important thing is like, again, looking at resources and constraints. Like I saw that a lot of high end escorts were marketing like this GFE experience. But as a constraint, I have a neuroatypicality where I just don't have empathy. I wasn't born with it. So I was like, you know what? I need to figure out a way to make this marketing work for me. So I reverse engineered my brand and marketing to speak to the clients that I had when I worked in finance, and the colleagues that I had, because I had this idea where I was just like, let me test this. I could be wrong. I could always modify. But I think that the like office affairs and office fantasies and all of those could be a really good market for me. And I want to target a client base that I am going to be good at serving and it's going to be sustainable for me to serve these types of clients. So that was sort of how I applied my prior experience to this business, even though it seems like they're completely divergent. Honestly, what surprises me more is that there aren't more fed up like senior female investment bankers who are like, fuck this, I'm sick of getting sexually harassed for free and like proverbially sucking dick at Goldman Sachs. I'm going to become a high-end hooker and make a bunch of money for way less stress. Like that's the part that shocked me more, that there weren't more finance gals that made my decision.
That's really interesting that you say that. One of the things I'm thinking when you're telling me this like background story, and I agree with you. Like business is business at its core. The skill sets transfer pretty much industry wide. The only one that doesn't transfer from mainstream to us is like being able to run Facebook ads, which I love to harp on because God, business would be easier if I could run paid ads. But the thing that stood out is like when you're talking about how in finance you were selling these companies for parts or like going through their bankruptcy and redistributions, it makes me want to ask you like as an OF creator, if I quote unquote went bankrupt and like had to completely start over, completely rebuild my adult business moving forward, like what advice comes to mind that you could offer? Like just because to relate them to each other, I think it's so powerful.
So to clarify, in this hypothetical, are you personally declaring bankruptcy? Is your LLC declaring bankruptcy? Or like what does going bankrupt mean to you in this hypothetical?
So I'm going to pull from real life experience. Let's say that taxes came down hard because that's something I've definitely gone through, and I had to file bankruptcy in that way. I guess it'd be my LLC because I am incorporated.
Okay, so first of all, good job on putting an LLC between your business and your personal assets. That is one of the main reasons why people should have LLCs. Often in this business, I see a lot of adult entertainers create LLCs, and they're just not a good fit for their type of business. That being said, in your situation, your LLC really prevented the bankruptcy from hitting your personal assets. So great job on that. And then, I'm sorry, can you rephrase or reiterate the second part of your question?
Yeah, like if I was going to have to rebuild my business as an OF creator, or not an OF, I should be more wide, as an adult creator, what would your advice be? Like where would I start?
Okay, so two questions. Did that bankruptcy discharge your tax debt?
Let's say that it did. This is all hypothetical, guys, by the way. I'm
Yeah, yeah,
not
no,
making up, I
of course,
swear.
it's hypothetical. Yeah, no, no, I'm sorry, I don't mean to put. That's why I like to make up examples because I don't want to put anyone
Yeah.
on the spot. But like
No,
again,
that's fair.
hypothetically, I need to understand what kind of bankruptcy it was. Like, it was a bankruptcy that discharged all of the debts, correct?
Yeah, let's say that. Yeah.
Yeah, again, hypothetical. So assuming it's a bankruptcy that discharged all your debts, then my next question is, given that it was a corporate bankruptcy filing, because I have not worked with my experience is mostly with corporations, did that affect your did this hypothetically affect your personal credit score?
Let's say that it doesn't, because my corp that I have filed for my business is actually a C corp.
Okay,
I'm
cool.
sorry, an S corp, an S corp, an S corp.
Yeah, it doesn't matter because they're both like iterations of LLCs, and the purpose of limited liability is that it doesn't hit your personal assets, right? So your debts are discharged, you have to start over. So here's the beauty of starting over with respect to bankruptcy and corporate entities, because in your case, hypothetically in your case, it did not hit your personal credit, and my guess is that you did not have to sell off any of your follower lists or assets or anything like that in order to pay off the IRS. And because of that, you still have all of those things, right? So like
Mhm. Yeah.
you didn't lose your account. So I would say, absent additional information, like if I were you in this situation, I would just start a new well actually I let me fact check myself on that because I'm less familiar with the nuances of personal bankruptcy. So assuming you can just set up a new LLC, I would do that, assuming you cannot, but there might be regulations for personal bankruptcy where you can't do that just to get out of paying your debts, right? So assuming you can set up another LLC, I would just start right over. And I would just repurpose all of the assets, like all of the follower lists, the brand that you've created, et cetera, et cetera. I would just do it that way. I mean, I'm speaking from a position of ignorance because I used to do credit counseling for people who have filed bankruptcy on a personal level, and statistically, people who have filed bankruptcy on a personal level are are like significantly more likely to do so again. So I volunteered for a little under a year doing credit counseling, but I wasn't involved in their bankruptcy process. I just did like their debt renegotiation and financial planning. So I've never gone through or seen like an individual bankruptcy aside from large companies.
Yeah.
So I hope that's enough information. Feel free to ask me follow up and clarification on that.
No, I love that. This is kind of what I was curious about. Is like really what I want to get to because if I was like, I think creators they don't think often about their adult work as proper entrepreneurial, events or businesses. And I think realizing, and kind of the thing I wanted to get to is like the fact that we do have assets. You have your library of content, you have your email list, you have your followers on all of your profiles, you have your digital domains, you have all of these things that are valuable, and often creators don't look at them that way. So like even the idea of like selling your business as an adult creator and being able to exit for a little bit of money, like that's a very real thing that big performers can do when they sell off their library or they sell off their licensing to content. Like I think that what I wanted to just get to ultimately is to reframe the way we think and the way we go into this conversation, is that these are real businesses and they can be managed and navigated in that way. And I think too, like your journey is so fascinating, where you came from to where you ended up. It makes sense that where your background is, not being super financially stable, that you were really drawn to finance. And I think that a lot of creators have a lot of financial ups and downs, just generally. I know that's something I experience. I mean, when you work for yourself, there's a lot of ebbs and flows. So I think what I would like to ask is like, what's your advice on handling income fluctuations and like trying to keep things stable?
Sure. So I have a semi long form YouTube video on this. And in advance, please excuse the production value. It was just me and my finance bros trying to get the educational content out there. But there is an episode. My YouTube channel is Money Talks with Mia. I made it before I launched my company, and it was basically like intended to be an outline of a personal finance 101 for adult entertainers across the industry. There's an episode on saving strategies for irregular income that goes into this in more detail, but I'll recap it here, which is basically that the uneven income that we experience in the adult industry is not unique to our industry, right? Like many gig workers, consultants, even people in finance, right? Like a lot of finance jobs, like your discretionary bonus is often more than 100% of your base. And you'll have years where it's zero, and you'll have years where it's 2x your base and everything in between. And you'll have years where you get fired from your job just because there's a downturn in the economy, or you fuck something up, or some iteration of that, right? So everybody experiences ebbs and flow. I would say most people experience ebbs and flows in their income. So the way I try to break down this problem into a tangible solution with steps is, and I'm kind of speaking to the middle here, right? I'm making certain assumptions just to generalize this example. Like I'm assuming that you are solvent, meaning like you are making enough money to cover your expenses and then have a little left over to save, right? Because it's a separate conversation if you're in a worse situation. But I'll speak to the middle here just for simplicity. So I would say your first priority is setting aside roughly 30% for your taxes. And we can get into a little more detail on that later. I know you have one of my very close colleagues and friends, Catherine. She talked about this a lot more in depth in estimated taxes. So I won't go into too much detail on that. But in general, like every payout you get, every booking you do, set aside 30% of that for your taxes. Like, and that's a ballpark. And that's just to make sure you're not in a situation where you can't pay your taxes. And I say that with absolutely no judgment. I tell all of my clients, all of my friends this: I'm here to alleviate your financial anxiety, not to add to it. I'm here to help you. I'm not here to judge you. So, I hope that no one is taking that as like as criticism. Anyhow, so moving past that, so you take all the money that you make, because if we think about it this way, the way I like to think about it is, if you have a W-2 job, right, taxes are already withheld from your paycheck, and your employer is reverting that money to the IRS. And the reason as self-employed people, we have to pay estimated taxes quarterly and then taxes at the end of the year additionally, is because we do not have anything withheld. And like, bitches, we're not special. Everyone has to pay taxes. You know what I mean? Like, I always tell people, like, especially for people like myself who do escorting or some form of not entirely legal sex work, like outside of a couple of states like maybe Texas, like in-person sex work is like maybe a misdemeanor. In New York, they don't even prosecute it. Tax evasion is a felony. Al Capone did not go to jail for killing people. Al Capone went to jail for tax evasion. So if he couldn't get away with it, neither can you. So prostitution may be a misdemeanor, maybe not. Tax evasion is a felony. Don't fuck with the IRS. So what you take home, right? Like set aside 30% for taxes. And then I would say the more annoying, burdensome lift is that you have to determine what your business and personal expenses are, which can be a daunting task. So, one way I help my clients do this, and I do for myself, is I take like prior year, right? Because I had to file my taxes anyways. I know what my annual spending is. And so basically, like I know what my all of my total annual business expenses are. And I do separate like fixed from variable, right? So fixed would be like the portion of my rent that is my in-call space and client bathroom, right? Like that's the same every month, whether I have clients or not. Variable would be like the number of condoms I use. And I parse those out. So like I have an annual number of how much money I spend to run my business and what of that is fixed and what of that is variable. And then I take that as a whole number. I just divide it by 12 and I'm like, okay, this is an estimate of what my business expenses are on a monthly basis. And then I add to that what my personal spending is. And again, personal spending being realistic, right? Like if you spent $1,000 on lattes last year, it's not realistic to be like, I'm going to spend zero this year, right? Unless you suddenly developed an acid reflux issue and can't have coffee. What you want to ideally have is a totality of your expenses, business and personal, fixed and variable. And at a top line, you take that whole, let's say like your total spending between business and personal last year was $100,000, or we'll just make the math easy. It was $120,000. That's 10,000 a month, right? So you want to have 3 to 6 months of cash equivalent savings. So that's between, in my scenario, I said 10,000 a month, right? So then you want to have between $30,000 and $60,000 in cash equivalents. So cash equivalents are things like checking accounts, savings accounts, money markets, CDs, treasury bills. So as investment managers, we define assets in three classes, right? So you've got cash equivalents, which are very, very safe, immediately liquid, and it's equivalent to cash. That's why they're called cash equivalents. That's your emergency fund, 3 to 6 months. And I give that range because if you are someone who, like me, is maybe kind of a workaholic and doesn't take a whole lot of time off, like maybe 3 months is totally enough. If you are someone who maybe likes to take a little more time off, has some medical issues, like it is more prone to needing more rest, then maybe 6 months is more appropriate. And that will alleviate some initial financial anxiety. So once you have your 3 to 6 months of cash equivalents, then so first taxes, right? Then cash equivalents for emergency fund. And then what you have left over is what you are in a position to invest and save for short, medium, and long term goals. So this is everything from indulgences, like maybe you love jewelry, you want to buy a Cartier bracelet, or you are looking to buy some property in the next 5 years, or the simplest example is you're just saving for your retirement. And I want to clarify that retirement, I mean, in this day and age, retirement used to be you quit your W-2 job and you're playing golf with your buddies at 65, right? Like that might be some of us, but I think for others of us, myself included, retirement to me was more like what we call in finance a fuck you number, where we made enough money that we didn't have to work anymore. So we're choosing to work. And that's how I like to think about retirement because it gives you the option to continue working, but you no longer have to work. You no longer have to take that job or see that client or whatever. And for me, my fuck you number was the number at which my investment portfolio was generating enough passive income that I could live on that comfortably without significantly downgrading my lifestyle. And as a result, I felt comfortable that I could live on my passive income into perpetuity, barring any like crazy black swan tail end unforeseen circumstances. And so I am like under that definition financially retired right now.
If you're enjoying this podcast episode so far, please take one moment to share it with another one of your adult content creator friends, because you know what the rule is here. We do not gatekeep, and we want to make as many adult creators' businesses as easy as possible. And you sharing this episode with them might do exactly that. Thanks so much in advance. That's amazing. That's really practical advice. Like, one, get your taxes squirreled away and sorted. Two, have that cash equivalent. So if you can't work for any reason, you have 3 to 6 months to live off of. And then to make your investments wisely so that you have, the ability to live or retire or work without the financial stress of like whatever bills are coming your way. I think moving forward, like if you've got that squirreled away, if you've got that all set up, what is the long-term like financial health that creators should be considering? Like when you mentioned retirement plans a minute ago, what are some straightforward ways for adult creators to start planning for the long term and for the future?
Okay, that's a great question. I'm going to have to give a legal disclosure and caveat. I apologize, everybody. Any information that I am giving on this public broadcast is for informational and educational purposes only. It is not to be considered individual financial advice. My company, Mealy Financial, is not soliciting any business on this broadcast. I think that's it. Okay, so with that out of the way, um, sorry, can you re-ask the question just real quick because it just reminded me that I had to give that disclaimer before I give you an answer.
Yeah, no worries. Just like in terms of long-term financial health, like in retirement plans, which we just mentioned, what are some straightforward ways for creators to kind of plan for their futures?
That's going to depend heavily on what you want that future to look like. So I think to give an easy answer, I'll break down. I'll give two examples. So, well, I'll just give one example because I give myself as an example, right? Like, I think to plan for the long term future, look, like self-employed people in general have a disadvantage in the sense that not only do we have to handle our own admin and taxes, et cetera, but we also don't have a company that is automatically enrolling us into 401k and, doing these educational seminars that they're doing them. So we're just going to figure that stuff out ourselves, right? And then as the adult industry, we have the added terrible circumstance that financial professionals who are unethical, unscrupulous, unlicensed, sometimes like literal criminals, scammers, try to sell us shit. So that doesn't help. And but I'll give you an example of one of my clients who is a dancer. And I think for a lot of us, I'm using us as a proverbial like creator, like adult industry, kind of not including myself as the one anomaly that came from Wall Street. So for a lot of us, it can seem like saving and then dumping it into a high yield savings account is just like running on a treadmill. Like we don't know where the finish line is. We don't know what the goal is. We don't know what it's going to look like for us. And if you find a trustworthy financial advisor or financial planner, or even a friend who knows Excel, or you want to figure this out yourself, this is the exercise that I did with my client, who's also a personal friend of mine. So I actually did this with her before I launched my company, just as a favor. I asked her she was like, when can I retire? And I was like, well, what do you want to do upon retirement? She's like, I want to be a stay-at-home mom. And I was like, all right, what amount of money do you want me to generate for you as an investment manager in passive income pre-tax in order for you to be able to live comfortably? So like we were making certain assumptions that like she might have a couple of hobbies that bring in money, but she's not counting on that, right? Like she's probably going to have a partner who's contributing, but she's not counting on that. So basically she told me that she wants $5,000 a month pre-tax to live on, and she's going to move to a lower cost of living city than New York. And I was like, okay. So I basically just plugged those payments into Excel in a present value calculation, and I generated an amount of money that she needed to invest with like relatively conservative but risk adjusted assumptions on what my company can generate for her in terms of investment returns and compounding. So I gave her a total dollar value savings goal of what she needs to have invested in her MLF account in order for me to generate approximately that for every month. Not that it's going to be that every month, right? So on like an annualized basis over many, many years with some volatility, but not a ton because we're managing that, I told her she needs to save up $750,000 for us to invest in order for us to generate her desired passive income upon retirement. So then we took it a step further and we were like, okay, now let's look at how much money you have now, what your like the exercise that I just walked through before, right? Like what are your expenses, what are your business expenses, what are your personal expenses, and how much money you are currently making at the club. And we were able to sort of like optimize and tweak the night she was working, the time she was working, and like increase where it was realistic for her working hours in order to come up with a projection of how many years she needed to additionally work and what she was realistically and comfortably going to be able to put into her like investment account for retirement savings. So basically, I was able to answer her question and say, you need to save up $750,000. I think you will be able to do so given the information that you have given me within the next 5 to 7 years. And this is the initial plan for like, you're going to work these months and these nights, and we'll reevaluate every like 6 months or 12 months or whatever that is. So I want to also point out in this example that there was an interesting study that was done of sort of like labor time allocation efficiency for Uber drivers. A bunch of economists evaluated the data around Uber drivers' hourly earnings and found that they were working inefficiently because they were trying to do, and it's not their fault, I'm not blaming them. It's just, economists have certain opinions. Sometimes they're theoretical and don't work. In this case, I think it's actually applicable and helpful to us. So basically, they found that Uber drivers would try to hit a certain number every shift or every week or every month. And because they were doing it that way, they were driving more hours at times where they were making less money, and they were driving fewer hours at times where they were making more money. So basically, what I do with my stripping and what I told my dancer friend is like, look, we dance in New York. And we know that strip clubs in New York, statistically, historically, doesn't matter what the reason is, tend to be more profitable and busier from roughly like mid-March until like mid-June, and then again from mid-September until the week right before Christmas in December. So we basically prioritize working during those busier times, and we save our energy during the slower times so we can rest, so that we can be more ready to work during the busier times. And that's like a really simplistic way of sort of like, from a business standpoint, trying to optimize your returns.
Yeah, no, that makes perfect sense. I think that making sure you're putting your time places that it's ROI positive is just generally good business advice, regardless, point blank. I'm wondering, because like even listening to this, you're super fluent and you're very familiar with investing, but investing can feel so overwhelming, especially if you don't have a finance background or you're not super familiar with how it all works. So I'm wondering if you're new to this or if you're outside of the, I guess, community with a financial background or you lack a financial savvy background, where would you start if you were completely new to investing as an adult creator?
So this is a really tough one. I think that what a lot of successful people do who have money and resources is they outsource, myself included, right? Like, I am really terrible with content. Victoria does all of my content, and I handle all of her money. So, without soliciting for my company specifically, I will say that if you are comfortable doing so and can afford to do so, if you're completely new to it, I would get some professional help, honestly, because there's a reason why people go to business school. There's a reason why people take the licensing exams I did. There's a reason why this is someone's entire job to explain this to you, do this for you, et cetera, et cetera. I think that one of the biggest mistakes I've seen adult creator or like just sex workers in general do is like, I saw a stripper buy a house and end up losing money continuously on the house that she wasn't able to sell because she did not properly model out that business plan of having a real estate side hustle, right? I have seen sex workers lose their shirts trying to day trade and pick individual stocks because when you don't know what you don't know, you read the news and you think, I'm going to buy the dip on NVIDIA. And the reality is, by the time it's hit the news, the smart money, meaning institutional money, has already priced that in. So you might get lucky and be buying a dip. You might be paying the wrong price, and more likely you're paying the wrong price because I caution non-professional investors against buying individual stocks. And I'll say that I don't even buy individual stocks because I just don't believe that even with my 12 years of finance experience and having an investment company, I don't believe that I have the time or the resources to outperform and outdiligence the quantitative computers and PhDs and industry experts and teams at hedge funds that are literally charging their clients significant fees to do this, right? To beat markets. And so I would say if you're completely lost, like that's a good time to hire a professional. However, it's difficult when you don't know what you're doing to vet a reputable professional. So like going with a financial advisor, I'll give you a little background on that in order to find an appropriate financial advisor. So first of all, you want to go with someone who is properly licensed, right? Like it's a heavily regulated industry for a reason. The Consumer Financial Protection Bureau is working really hard for us, and we should take advantage of what they're doing, right? So like licensing is the first step. If you hire a financial advisor, do your diligence on that person, right? I mean, the same way that you screen clients, but do more. So like I encourage all of my clients before they give me their money, like just because I'm your friend, like do this as a good business practice, like life practice, right? Like research me, see if there are any red flags. Like here's my CPA license, here's my registered investment advisory license, here's how to check to see if I have like disciplinary actions. Like Google my legal name and see if I've been like, there's any media scandals around me, see if I've been sued, like, see if I'm actually a criminal, do that kind of diligence and like use your sex worker skills in evaluating these people, like, via social media, via press, via whatever, via consult. I offer 15-minute consults to current or potential clients. And I charge for those, not because I want to charge people, simply because I want to keep our fees very, very low. And the majority of my clients do not want one-on-one. And so I don't want to charge everybody for it, basically. So for me, I tell people, like, if you want to get to know me, if that's what makes you comfortable, like just book a consult. I'll answer anything you want to know. And find a professional that is suitable to you. Suitable to you means properly accredited, licensed, someone who you believe is going to act in your best interest, someone whose fees you find reasonable, someone who it makes you feel good and comfortable as a paying client, right? Like we're used to a lot of people discriminating against us. Like I had a dermatologist that I fired because she was just annoying about my job. I was like, bitch, I'm not here to give you a sex work 101. If you're that curious, Google me and read all my press interviews. Like, my time is money. I'm here for you to stick some needles in my face and for me to get the fuck out of here ASAP. So if you're wasting my time, I am a paying client and I'm like pissed. I'm out of here, right? So treat your financial advisors the same way. Like I think there's a tendency for adult entertainers to be like, oh, well, they know more than me because they're a financial advisor. I mean, they do, but that doesn't mean they're the right person for you.
Yeah, I think that's invaluable advice, just the fact to vet everyone and do your research, because it's very easy in this day and age to appear more than you are online, like to appear more educated or more well-versed or more, I guess, more accredited with an online presence, whether that's, paying for press even is a thing that you can do now. So I think when creators go into looking for any help, whether that's financial or otherwise, like that's invaluable advice to do the, background research, to do the Googling, to look for all of those indicators that you described, because that's a really great place to start. And also, even after that's said and done, making sure the person is the right fit for you, because you're kind of building this team around yourself, whether that's a bookkeeper and an accountant, a, financial advisor. These are people you're going to trust your future with, essentially. So making sure not just that they're vetted, but also that they're a good fit for you as a human is like base level awesome advice. I think that many creators really want to transition, into other business ventures and investments. And this is like part of most of our exit strategies. But I'm wondering, what financial steps should they take now that could make their transition, I guess, better later? Like what are some things we could be setting up as adult creators now for when we do get to a point where we're ready to invest, that's going to make that process go smoother?
Sure. So, I just before I answer that question, I want to add one thing onto my answer for the last question. So, or two things rather. If it sounds too good to be true, it probably is. Like I tell all of my clients, I'm not here to get you rich quick. If you want that, go to somebody else. I'm not comfortable taking on that risk for you or for myself. Get rich slowly. And that being said, as a general benchmark, right? Like I have a client who was previously with a financial advisor at a brokerage house. We'll just say Schwab. It wasn't Schwab. I don't remember which one it was. It doesn't matter. And I think it's challenging but doable through a combination of like free resources and talking to other people, talking to other colleagues, friends who have gone through similar things, or you can come on my spaces like this to ask people in the industry me questions. I had a client who had a financial advisor who was really, in my opinion, professionally negligent. Like she was comfortable with taking on more risk, and she told me that she wasn't happy with the investment returns that this financial advisor had generated for her over the past 5 years. And I'm like, that's insane. Markets have been on a tear the last 5 years and hitting all-time highs. If you're not happy with your returns, that person is like literally professionally negligent. So if you feel like the person that you're hiring as a financial advisor, as an investment manager, is underperforming relative to other people in their field, that's another thing to look out for, right? So on the one hand, get rich quick schemes, bad scams, avoid them. That being said, like if the S&P 500 is returning 15% in a year and you tell your financial advisor or investment manager that you're pretty risk tolerant and they're returning you 4%, fire that person. Like Anyhow, I'm sorry. I just, after I jump back to that point, I apologize for not answering your question. Melrose, can you repeat it?
Yeah, no, no, that makes sense. And that's excellent advice. Anything that seems too good to be true should
Oh,
definitely
you
walk
said,
away from.
and you
But
said
no,
steps toward like
yeah, making that
getting yourself there.
transition smoother. Yeah, yeah, yeah.
Okay, so I think I don't think I'm fully understanding the question. Can you clarify like what you think of as an example of maybe a step in your mind?
Yeah, like if I'm, at this place where I'm generating pretty stable income as a adult performer, and I feel like I have some ability in some savings set aside, and I'm kind of getting ready to start investing it, like what is the first step I would take to do that? That's going to make that transition smooth. So, like if I want to start, I don't know, maybe it's an IRA or a Roth or a mutual fund or something like that. Like, what would that first step look like?
Follow-up question to you. Are you doing this all yourself or are you hiring somebody?
I would be hiring somebody.
Okay, so if you hire somebody, they will handle all of that for you. Like we do all of that for our clients. We set up their retirement accounts, we allocate all of their, so basically like a good financial advisor or investment manager, it's kind of the same thing basically. The idea is that you give them discretion over the money that you place in the accounts that they manage, and they do all that for you, right? So like hypothetically, and again, I'm not soliciting here, just to give the example, if you opened an account with my company like after this call and you funded it, like we would send you a supplemental questionnaire beyond the Know Your Customer KYC questionnaire that you had to answer with our custodian in order to open that account. And that supplemental questionnaire, it's short, it's a couple pages, and that's for us to get to know you financially. And based on the way you answer that questionnaire, we are then going to take the money that you give us and the money that you're giving us on a monthly basis, and we will allocate that to the appropriate retirement accounts, the appropriate taxable accounts, the appropriate investments, the appropriate whatever. So basically, if in your hypothetical situation, if you're hiring someone, your first step is really just to find a couple of people that you're comfortable with, do your research, and if you want to, set up calls, right? And basically interview them and ask them what their plan is for you and see if you like what they say. Now, if you are doing it yourself, I mean, I could tell you how I did it for myself. I'm not sure how helpful that would be to our audience.
Yeah, I guess, yeah. I mean, I'm curious to know how you got started too. So let's go into it a little bit.
Sure. All right. So, when I started on Wall Street at 19, I had no money, and my company automatically enrolled me in a 401k with a company match. So if you have a W-2 job and you have a company that's doing a 401k max out that match, because like that 401k match is going to be anywhere from like 25 to 100%, which means you're getting a 25 to 100% return on money that you put in there. So like, yeah, definitely take that. The market's not giving you that every year. Trust me. Maybe some years, but not every year. And so I started with my 401k. And then because I worked at a financial consulting firm, they had all these classes and seminars and whatever for like new analysts. So I set up a Roth IRA. And then eventually I set up a traditional IRA so that I could do the backdoor rollover from traditional to Roth once I started making too much money to contribute directly to a Roth, which happened like pretty quickly. Um, and I put all of my investments, I think I did like roughly an 80-20, I want to say in the beginning, split between equities and debt. So, meaning like stocks and bonds. I did not hold any cash equivalents because I had very stable income at the time. And I think, let's see, what else did I do? I chose my investments in my 401k based on whatever index funds. So I preferred index funds over managed funds because they're lower fees. And I preferred bonds that were investment grade in order to manage the risk, meaning they're like AAA to single A rated. I don't remember the exact definition of investment. I want to say it's like AAA to B plus plus or something like that. But my tolerance for investment grade was like AAA to single A for my bond portfolio. I didn't buy anything individually. I bought index funds of bonds and index funds of stocks. I diversified across geography. So I had like a foreign markets one. I had a US one. I had small cap, mid cap, large cap, growth, value, etc. And I tax advantaged my investment choices and investment activity, meaning in my taxable brokerage account, I tried to only sell things at long-term capital gains for the advantageous tax rate. I have a portfolio of municipal bonds because those are, so municipal bonds are tax exempt from federal taxes always. They're also tax exempt from state and local taxes if you buy them in the jurisdiction in which you reside. So, being that New York City and New York State are high tax jurisdictions, I have a portfolio of New York municipal bonds because the interest on that is tax free. So, on a technical level, there's something called the tax adjusted return. So, let's say a corporate bond is paying you 8% interest, but you're taxed on that interest at your ordinary tax rate, at your marginal ordinary tax rate. But a municipal bond might be paying you 5%, but because you're not taxed on that 5%, the tax adjusted return on that municipal bond might actually be like 9% versus the taxable corporate bond interest. So I'll stop there because this is all like really dry, boring, and technical. So this is how I did my own. But again, I bet Wall Street.
Yeah, you have the background to understand. I am curious, so like if anyone is listening today that feels just completely lost when it comes to their finances, what would one small action be that you would advise that they could just do right now to start getting on track? Because I think like so many adult creators, the finance world to them is just so out of reach because things aren't stable yet or they don't have the literacy yet for it. So what is just that one small action they can do to start getting things on track, like to start feeling some semblance of control and organization?
Yeah, absolutely. I would start with knowing what your expenses and earnings are and understanding how much money you're actually making and understanding how much you need to be putting away for taxes. I think that's absolutely the first step.
Yeah. No, I mean, that's the first step for me too. Like I've struggled so much with the tax stuff just because it's been so impossible for me up until now to find tax help that was sex worker friendly and that would actually file on time. And like, it's been such a nightmare that knowing that and also understanding your business, like it's very easy to let your business get away from you if you really don't know what your profit looks like versus what your revenue. Like a lot of creators base everything off revenue. I make X on OnlyFans. Like, okay, but what is left after you've expensed everything? What is left after all your bills are paid? What does actual profit look like? So I love that as the first piece of advice because I think that's just so accurate, nail on the head.
If it makes you feel any better, most of the businesses that I restructured also struggled with that concept. They would be
Yeah.
like, well, Mia, we're growing like $7 million a year. And I'm like, right. And you're losing 9 a year because your
Yeah.
profit margins are fucked. Right.
Yeah.
And that's why the judge appointed me as your bankruptcy administrator. So here we are.
Yeah.
So with this issue is not unique to the adult industry. It's a lot of people. And frankly, this will make you feel even better potentially. This There are people in finance who struggle with this. Like, I cannot tell you how many idiots, and I will call them idiots, literally thought that like their best bonus year was going to be every fucking year and
Mm.
bought like a jet and 2 houses in the Hampton. You know what I mean? Like the overspending that I saw was like insane. And I'm like, homie, you made $6 million last year. How are you filing bankruptcy? He's like, well, 3 divorces and kids, and then I kind of bought a bunch of Rolexes, and I'm just like, this is unbelievable to me. I'm like, bro, you work in credit. What is wrong with you?
Yeah. Yeah.
So,
So even with the literacy,
yeah.
and that's a part that I want to touch on too. So you do pro bono financial literacy work for sex workers. So also, can you plug like where people can find all of your resources and get more support?
Totally. So on my escorting website, there's a list of press appearances. It's the media appearances tab. So some of those are features of me. You can ignore those. But there's also, if you scroll through it, there are appearances that I've made. There's the articles that I've written, and like there are features that are focused on like financial literacy and information. So that's some of it. We are launching a Mia Lee Financial blog. So the website is mialeefinancial.com, and probably within the next few months there will be a blog there with free financial information. You will catch me on a bunch of podcasts, video, whatever things like this that will hopefully be consolidated on my media appearances page once I get my shit together. Um, and I have a YouTube channel that, again, ignore the quality of the production content, please. This was not Victoria. This was me and my finance buddy trying to get the information out there. But my YouTube channel, Money Talks with Mia, is kind of like a personal finance 101. The videos are roughly 10 minutes long each, and they'll give you a sort of, yeah, it's basically like a personal finance 101, like business 101 for adult entertainers. Those are my free resources. I occasionally will, and then any like add-on stuff that I do, like when I get invited to like teach a tax seminar, I used to teach like a how to step through a TurboTax, like self-filing seminar. every year. And now my schedule no longer allows for that, but I might be doing that again if someone sets it up for me. So if you follow me and my company on socials, we'll be announcing all of our free resources, appearances. Melrose, I don't know if you're going to be at Exodus Miami, but I'll likely be speaking there as well. And all of those things are recorded and then like reclipped and posted different places. And I'm like still working on, so basically I'm on X on this account, Mealy Financial, every Wednesday at 1 p.m. Eastern time. And I'm going to be talking about a like current event in financial news and how it applies to us, right? From the perspective of investments as well as cost of living, like day to day life, from a money perspective only. So please do not yell at me about the state of our politics. I'm only here to talk about my money and your money. Okay. And same thing every Wednesday at 2 p.m. I'm on Instagram live, currently from my individual Mia account, just because we're still sorting out the stuff on my Mia Lee Financial account. But eventually that will also move over to Mia Lee Financial. So you have access to me like basically for 2 hours every week to ask me anything you want. And yeah, to learn about financial markets.
I love that. And super generous too. So I wanted to kind of start to close this out. And I had this idea because we're restructuring things and wanted to try something new. But at the end of each episode, we want to have our guests kind of like leave a question for our audience to answer and to kind of think about. So we'll have them tweet, their response using hashtag OTWpod so that everyone listening to this episode can also join important conversations we're having and just get more insights on the topics despite and aside from my own opinion and lenses. So I was wondering, what question would you have for adult creators or sex workers listening today?
Oh, that's a great one. So one of my biggest challenges is that I've been told I sound too much like I'm talking on CNBC Squawk Box and not enough like I am speaking to bridge the gap between finance and our industry. So my question is, it's more of a request. If anyone would be so generous as to give me the most harsh, real, like productive, constructive feedback possible on anything related to my company's website, my bios, my communication, like the relevancy of the things that I tell you guys. That's what I would ask for so that I could
I
be
love
the
that.
most useful to our community, whether you are a client or not. Like I just always solicit that feedback from my community because I want to be the most efficient, whether I am working for money or working like for the betterment of my community.
I love that. Okay, so if you're listening to this episode, tweet us just about any feedback you'd want to leave Mia and any criticism, constructive, obviously, of her company, and just include a hashtag OTWpod so she can take a peek and also so other listeners can contribute. I love that. You're open to feedback. I'm the same way. Tell me where I can be better. Okay, cool. So to wrap up this episode, I would just kind of like to, one, say thank you to Mia. I appreciate you coming on. Thank you for the time. You're a wealth of knowledge, as always. And we're already getting DMs about people curious about your services. So I hope they find their way to you. And I hope that you can make more of our community a little bit more financially literate.
Oh, I'm trying to make them rich too, but okay.
That as well. That as well. We could all use some of that.
Thank you. Just a heads up, my and Mealy Financial DMs are locked everywhere for compliance purposes and others. So you can email my team clients at mealyfinancial.com, but if you're DMing me on Instagram, I'm never going to see it. So public comments we'll see, but please no DMs to me.
Perfect. Love that you included that. Good. There you guys have it. I want to wrap up this space in this episode and also just take the opportunity while everyone's still here listening to thank Joel Benjamin, aka Powers of Man 1, for the kind feedback that they gave us right here on Twitter. They said, "No one does it better than you, Mel. Thank you for educating, elevating someone in your industry." I appreciate that, but the credit is not to me. It takes guests like Mia and my team internally and all the work they do to make any of this possible. So while I appreciate the feedback, it is definitely taking a village on the inside. If you are listening to these podcasts, you're probably already super familiar with SWCEO in general and our YouTube channel. We do post new educational courses there weekly based on the most requested topics that our community needs guidance on. So if I can't teach it, I will link up with another expert who can, so that the CEO squad gets the information they need. We recently released a course about the secret to testing and tracking for adult creators, so you can make data-driven decisions that actually increase revenue and audience engagement. So if that interests you, feel free to check out our YouTube channel at youtube.com/SWCEO. And while you're there, if you're feeling really spicy, hit the subscribe button. We do have a king phrase over here at SWCEO, so tapping that would really do it for us. With all of that said, I hope that you take what you learned here today and turn your potential into profits. Nothing is going to matter if you don't take action on it. So now it is your turn, CEO Squad. Go be bad and build a very good business. Thank you for listening, and I'll see you a week from today. Bye, guys.
It would be absolutely incredible if you rated this podcast 5 stars and left a little review. We want to get this podcast to as many adult creators as possible, and you taking a second to leave a couple stars and a review really helps us do that. Thanks so much.